So when we are presenting our financials to users, when we are doing our financial statement reporting, our statement of financial position, we always use the basic accounting equation. And in some cases, you'll see in your study guides, especially, they'll keep referring to the BAE, the basic accounting equation. This is what we're going to take a look at now. So what we look at, what belongs to you as the owner, your financial position. What is the company's financial position? Anything that the business owns minus anything that the business owes. It's a very practical understanding or very practical application of the realities of life, right? When we take a look at what you're worth, we need to take a look at all the stuff you have, but we need to take a look at all the bills that you have to pay and all the debt that you have as well before we can say what's really yours. You aren't rich if all the assets that you've got is because you've taken loans out for everything. Because if you sell all the assets and you pay off all the loans, what's left? Do you actually have anything? So your real wealth and your concept of wealth and what really belongs to you, your equity, is about what you own minus what you owe. Whatever's left, we talk about as our net asset value or our equity. So when we present and when we report on our financial position, it's probably a pretty good thing that we let people know what the net asset value is. So let's take an example. Just because you have a 300,000 Rand car doesn't mean it's completely yours. Just because you see someone driving around in a 300,000, 400,000, 500,000 Rand car doesn't mean that they're wealthy, doesn't mean that they're rich. If they were financed by the bank and they owe that entire amount back to the bank, it means they actually have nothing. They've got nothing. So what is going to be yours of that money? Let's take a look at an example, very basic. You have a 300,000 Rand card was financed by the bank and you still owe the full amount. You still owe 300,000 Rand. If you sell the car for its 300,000 Rand value, let's say you got lucky and you got it for 300,000, then when you take a look at what it is you own something that's worth 300,000 Rand, but you owe 300,000 Rand on that as well, which means your net asset value is zero. So in terms of your equity or your net asset value, you've got nothing. You have to pay the bank first. You get what's left. Your net asset value is what's left. Let's take a look at another example. Same 300,000 Rand car. It was financed by the bank, but at the moment you only owe 200,000 on it, so you've paid it off. If we look at that, we then owe 200,000 Rand to the bank. How much do we own in this example? We bought a 300,000 Rand car. So can we say then that it's worth 300,000? Well, if we sell the car for 250, then it means that the car is only worth 250, which means that what you own is only able to be valued at 250,000 Rand, which means your net asset value is 50,000. So in this case, what's really yours, your net asset value or your equity, would be what you own, which is the value of 250,000 Rand minus your 200,000 Rand liability, the money that you need to owe the bank. So whenever we take a look at what we own minus what we owe, it leaves us with our net asset value, and it really would be a good thing if that was a positive number, not a negative. You want to make sure that what you own is more than what you owe. So we all know in practicality that when you look at someone who lives a fantastic lifestyle and lives, goes overseas all the time and has expensive cars and houses, it doesn't actually mean that they're wealthy. We need to first look at how they were financed, whether or not they have expensive loans and whether or not they've taken out debt and credit cards and overdraft to pay for it. And once we've set the two off against each other, then we can start to tell whether or not they really are wealthy. So our businesses are exactly the same, and we use the statements of financial position elements to represent exactly what we've spoken about. What you own is your assets, and we'll get into the definition, all the criteria of assets, so don't panic about that just now. But what you own are your assets, what you owe is your liabilities, and your share will be your equity. What's left? You're going to get your share. Now we need to keep in mind that this is an equation. So that means that kind of should remember that word from maths a little bit, the word equation. So let's take accounting out of it. What did we learn about equations way back in school, whenever that was? What we learned about equations was that the one side had to equal the other, right? So we said if you could say 1 plus 2 equals 3, that was an equation. And this side, the left-hand side, had to equal the right-hand side. We also learned that you were able to manipulate the equation, which means you were able to take things from one side of the equal sign over to the other. But if you did that, you had to change the sign. So we could say, let's take that 2 away from there and put it on the other side of the equal sign, but we said that that had to be subtracted. So now we're sitting with 1 equals 3 minus 2. Does the equation still balance? 1 equals 3 minus 2 is equal to 1. Yes, it balances. So these two say exactly the same thing, even though they are different. And our accounting equation is exactly the same. So we've taken a look at the maths. Now let's take a look at the accounting. We've got assets minus liabilities equals equity. Assets minus liabilities equals equity, or what we talk about as, and what your study guide refers to and your textbook will refer to as a net asset value. Those are saying the same thing at the moment. So your assets minus your liabilities equals your equity. So many students I know, and I remember doing the same myself, used to write these little things on post-it notes and put it on the wall so that they never forgot where the equal sign was, plus, minus, whatever. And I understand that. However, I'm going to ask you to watch this video once or twice, really think about it, because if you get into an exam and you panic a little, you've had a bit of a bad day, you may forget which side and where the equal sign is, and. I can't have that. We need to make sure you're comfortable with this. So I'm going to say watch this video, go through it and think about it. Make sure you're comfortable with why it is that we're subtracting one from the other. Our assets, that's what you own. Minus what you owe equals what's left. It makes sense, right? You owned the asset, the 250,000 rands car. The car was worth 250,000 rand. You owed 200,000 on it. There was left. So when you get into complicated examples a little bit later and you're not quite sure where it's plus should minus, is it plus liabilities or minus liabilities, take it back to basics. Take it back to this thing and make sure that you can work it out and think about it for yourself rather than just memorize it off by heart. So when we look at now manipulating this equation, because it is an equation, if we say assets minus liabilities equals equity, we could do exactly the same thing we did here and say we can move the liabilities from this side of the equal sign over to the other side of the equal sign. That would leave us with assets equals equity and liabilities on this side. But remember, we have to change the sign, which means we would add that. So now what we've got is assets equals equity plus liabilities, and they must still balance. So in this case, remember we said your asset was worth 250,000 rand. Your liability, you owed 200,000 rand on the car, and that meant that you had 50,000 rand left. If we look at the same thing here, 250 minus 200 equals 50, so therefore left-hand side equals right-hand side. Your assets here, 250,000. Your equity was 50,000, and your liability was 200,000. 250,000 is equal to 50 plus 250, which means our left-hand side and our right-hand side are equal, which means these two say exactly the same thing and we are happy. When we present the statement of financial position, we will be using this. Okay? This is how we represent the statement of financial position. We represent all the assets and then we represent all the equity and liabilities. If you go back to my little example, my little format of the statements of financial position in study unit 1, you'll see the assets were separate from the equity and liabilities. Why have they done this? Why have they confused it? That makes much more sense. Your net asset value, what's left is what you own minus what you owe, which is great. They've done this because of what we spoke about right up front in this particular chapter, which is taking a look at where you get the money from, where your funding comes from. Okay, where did the money come from? Remember we said, where did the money come from? Did it come from your investors? Did it come from liabilities, banks, finances? Where did the money come from? And then your assets is, where did the money go? What did you do with it? What did you invest it in? We invested in machinery, we invested in whatever. So when we take a look at your investments, what you did with the money, where did the money come from and where is it coming from and where is it going to go is how we've split from there. The money is coming from the investors and the loans and the financiers, all your liabilities, and it's going to all your assets, to hopefully increasing your assets, your PPE, your inventory, your debtors, your cash, etc., etc. So we split it that way. This, make sure you're very comfortable with this. This you're going to have to get very up close and personal with. You've got to be very comfortable with this. It's going to have to be your best friend. This little counting equation here, you're going to have to make sure that you are supremely comfortable with this. Go back and do exercise 1 and 2 from the study unit, from study unit 2 in your UNISA study guide. Make sure you're comfortable with it. Again, The examples are very simple at the moment, and that's great. But as they get more complicated, you're going to want to make sure that you can come back to basics and think about it simply so that you can work it out. Don't just rely on memory. In the exam, we forget things, we panic, we have a little bit of a bad day, and things don't quite work out according to plan. So make sure that you're comfortable with how this works, make sure you can think about it, and if you're not quite sure what it is, leave it for a day or two, come back and start again and make sure that you're comfortable with it.